Okay, Kubi, I won't say the figure, but the number, but generally the sentiment is this market is significantly down. It's almost at 20,000. What do authorities need to do? What does Oscar Nyema and his team, what do they have to do at the NSC?
Well, maybe we need to see a little more. So far, we've seen quite a lot of pronouncements. There have been a lot of reassurances in terms of the appeal of the stock market. But what we're seeing now, maybe more interest in fixed income, maybe more interest in the money market, with yields guaranteed between 15 and 17%. There's a lot of interest now in the money markets, in fixed income instruments, and maybe we're seeing those effects, because if you compare them with the stock performance, you're talking about shares that, like you said, they're down year to date. At the same time, you're looking at dividend payments that aren't very attractive. If you take it as a proportion of share price, you're looking at 3 to 5% returns. It explains why there's less interest in that market.
Okay, let's talk about what's happening on the fixed income side. It's the 16th of November, and we had been told by the DMO that today was when they were intending to sell 65 billion naira worth of 10-year sovereign papers. Have they come to market, and what's the response been?
Yes, they've come to market. Bids have been submitted. We expect the results to be out later today. There should be some level of interest, but the question is, the kind of yields that investors are looking for have gone up. And we think we're going to see interest above 17%. There may be some bids below that, maybe 16, but interest should be the 17 to 18% range, because you can compare that with what you're getting for 91 to 360 days, which is above 16% now for the 1-year treasury bills.
Yeah. Okay. Now, as you did say, despite the market being down, the saving grace is on the fixed income side, attractive rates and yields. But we've also seen interest rates rising, and so coupon payments also something that's quite worrisome. For the benefits for those coming to the market, what are the trends we're going to see on the yield side of things? And then for corporate issuers, what would the incentive be to come to the market?
Well, I think we have a couple of corporate issues on the table. Those should be coming to the market soon. And what we're seeing, the first half of this year was quite good. We had a couple of papers come on. They'll be very relieved now that they were able to get their issues out before rates significantly moved. There's been a bit of a slowdown for new issues, like I said, just about 2 coming out now. And there will be some concerns, yes, because we are looking at interest rates. You'll be looking at a coupon return of maybe 17 to 18. So that might cause some corporate bond issuers to maybe delay a little bit and see whether 2012, because now we're looking at a 2012 scenario, might it be better to come to the market middle of next year and then just continue to run with the banks for now, then lock in when there's a slight dip in the interest rate. That may be what we'll see on the corporate bond market.
Comparatively speaking, federal government bonds versus corporate bonds, where does the interest lie? Because we know that the government comes to market because they're trying to fund some of their projects and their deficit as well. Are people confident in the state and its programs? Well,
for the FGN bonds, there's always interest in that. For the PFAs, they like the fact that they can lock in. They can lock in for 5 years and above, which is good because they know the kind of repayments they have. The yields are high. There's a lot of attraction for them at that end. For the corporate bonds, those generally are not invested in by the PFAs. It tends to be taken up more by banks or maybe by like hedge funds, finance houses. So they're kind of 2 different markets. Also, the risks on them are quite different. On one, you're taking a risk on the company. The other one is a sovereign bond. Yeah. So they appeal to different sectors. And
their rates don't tend to track each other. In Kenya, that seems to be the case, where the corporate bonds would always take their cues from the treasury bills.
It's exactly the same thing here. They track each other, but the corporate bond will be at a premium to the sovereign, again, because of the risk waiting for them.
Inflation has ticked up in Nigeria. Has that had any bearing?
A slight tick up, 10.3 to 10.5. We haven't seen it yet. Those numbers came out yesterday, and so far we haven't seen the effect. We expect to see more activity in the market next week after the MPC meeting.
Okay, what are you expecting from that MPC meeting? I mean, we saw the most aggressive of rate hikes at the last one. Are we expecting to see the governor and his team do the same?
Well, the last meeting was actually an emergency one. They took a very decisive action on the rates. Rates moved north, in between 2 meetings. Now we're back to the regular one. The question is, would the quantum of change have been enough at the emergency one to leave rates as they are? Well, the suspicion is that we may see a slight tick up again next week. We're not sure yet, but the general market sentiment is that we think rates may still go up slightly because part of the, whatever increase would have happened, this meeting happened at the last one. Again, we're close to the end of the year, but looking at these inflation numbers, looking at what spending might be, we suspect that rates may still tick up.
Okay, and what bearings are going to have on the currency? Because we are seeing the currency trading today at 158 naira, 157 yesterday. It seems to have definitely found a new resistance, and the CBN concurs that maybe it's time to start looking at 156 as a more reasonable rate.
I think CBN has implemented 156 as a rate because the cutoff at the WDAS, which is a wholesale auction, the wholesale auction lost 2 naira this week alone in the first auction. Today rates have remained stable, so we think that new resistance is actually in effect even with the CBN 155, 156. We'll probably see a little more depreciation towards the end of the year, not much. Maybe rates will stay around these levels, but we're already talking about a new resistance level even for the central bank.
Okay, and so going forward for investors who want to come into Nigeria, particularly those that are looking into coming into fixed income securities, they're going to look at an amalgam of issues. They're going to look at debt levels, they're going to look at the currency, they're going to look at policy, they're going to look at interest rates. Is this a time to be coming into the Nigerian market?
I would think so, because the devaluation risk has already happened. We've had a 150 band for a very long time. The band has moved already. So for people who are coming in now, you're quite confident that you're likely to see 155 to 156 official rates, and then the interbank rate maybe 2 naira higher, 158, 159 as you said. So we're likely to stay where we are, in a band of where we are now, maybe for the next 9 months, 6 to 9 months. So this would be a good time to come in.